Size of the silver market relative to so many other asset classes makes it interesting to imagine how the price will move when mainstream money tries to buy. Could you expand on that and maybe let us know what you think it will take to bring more of that mainstream, more of that institutional buying into the silver space?
Sure. And just for context, we have about 1 billion ounces of silver come to market each year at around $21. That's 21 billion. And when you think about that in relation to even the gold market, let alone stocks, bonds, treasuries, $20 billion, especially in today's expansionary environment where you see the massive amounts of the dollar value of assets that the Fed has been buying and moving money into, it doesn't take a lot of money to move that market. In fact, a lot of the silver, about 60-70%, is consumed by industry or jewelry or silverware. And there's only about, last year I think there was about 250 million ounces went to investment demand. And right now we're actually seeing a drawdown on the exchanges, so it's not as if there's a whole lot left floating over. So if we really get into an environment where the price starts to move or there's further degradation of the currencies, which, as you pointed out, we're seeing things get shaky, it's not as if there's a lot of silver out there just sitting there that people can buy. And if you start getting institutions trying to come in, if you start getting large funds trying to come in, you have the potential to move the market very quickly, whereas if a big fund wants to get a big portion of treasuries, that's not generally going to make a dent in that. So that's something that I think a lot of us have looked towards. Certainly a year ago at the silver squeeze back in February 2021, we saw the price move a little bit there, and that was with retail buying primarily, not trillions of dollars coming in, and we saw the effect, at least for a short period of time. Now, in terms of what it would take, I imagine that would be perhaps some sort of dislocation, of which we're heading into an era where these things are becoming increasingly likely. We've seen trouble with the English bond market a couple months ago, and they had to step back in, and so far things have calmed down there. Japanese yen has been running into trouble where they're keep intervening to prop up the currency. Not surprising that a lot of these things are happening when the Fed is raising interest rates and withdrawing liquidity, that you're getting some of these issues just in the same way that once they did that same direction of policy back in 2006, 2007, is when you ran into the housing bubble. So what happens if Credit Suisse goes down, or if one of these banks falls apart and there's contagion? I mean, you have some similar dynamics to what's happening in crypto. And if we see something like that in the banking sector, or if we see more metal taken off these exchanges, I try to be careful to not phrase it as we're having a run on the COMEX just yet, but we've gone from 150 million ounces in registered back in February of 2021 to down to 35 million ounces, and it's been declining pretty steadily. So something like that, or perhaps the other thing that would be interesting to see is if the price finally breaks 30, which we've seen the silver price get right underneath that, go over $30 for a couple of hours last year. And that was when you saw bullion dealers on CNBC. You saw the whole world talking about silver for a couple of days. And whether I agree with it or not, we've seen that a lot of the way investing goes these days is when there's momentum, or when the price starts moving. That's when people pile in. I would say for the most part, I think the majority of the silver purchasing and the silver ownership is confined still to a rather small subset of people out there. I don't think that mainstream people are heading into silver yet, but crossing 30 could be another one of those breakpoints that could lead that to happen.
You've also mentioned that you see a silver deficit up ahead. You've just spoken about some of the factors that are leading to that. Could you maybe break down that thesis for us, where you're seeing shortages? And I wanted to know if the construction of solar panels plays into that at all, because a lot of people are talking about that. Chen Lin, Gwen Preston, Peter Kraut are mentioning that photovoltaic solar panels are actually pushing silver demand quite a bit more. Does that factor into your thesis as well? And what are some of the other factors you're seeing that you think will lead us to a shortage here up ahead?
Yeah, well, first to start with, there was a report recently by the Silver Institute stating that we're headed for the largest silver deficit in decades of 194 million ounces. And that's in a 1 billion ounce market, so that's 20%. A lot of that has been the increasing solar panels. In fact, there's a fellow named Matt Watson who does a great presentation digging into that. He mentioned that right now, or actually in 2020, we used 115 gigawatts of energy, which required 100 million ounces of silver, so a tenth of the supply. And the Joe Biden administration and the International Renewable Energy Agency calls for 2,000 to 3,000 gigawatts per year of energy by 2050. So that's about a 20 to 30x, which, if you do that versus the 100 million ounces of silver that were used, you're well past what's currently being produced. So again, you have the green movement going into cars is requiring a lot more silver. All the other things that we do electronically require silver. So we're already in a deficit. You're seeing increased buying of physical silver for investment, and that's with interest rates going up. What happens when, and we can debate whether the Fed is going to pause or pivot. I think the idea that the Fed is going to have interest rates at 7 or 9% 2 or 3 years from now, it seems pretty unlikely. I know some people were thinking, and myself included, were they going to make it through this year without reversing course? All right, that's gone on longer than expected, yet it's not as if we're headed towards some stable rate environment, and whether the Fed pauses next year or whether they start cutting rates in 2 years or 3 years, you wonder what happens with the investment demand. So that combined with the industrial, you're already at a gap, and everything the Inflation Reduction Act talks about more green investment. So everything they're pushing to do to meet these carbon mandates requires more silver, at the same time that you're having people buy silver more as an investment than we've seen. A lot of channels like yours, there's the Wall Street Silver Group, where now I think there's more attention on silver than there ever has been before, at the same time where we're seeing people more concerned about what's going on macroeconomically. So when you project all of that going forward, if we're already at a deficit now and you have those factors coming into play, plus silver sitting close to the cost of production for at least a lot of the primary silver miners, permitting issues for some of the copper, lead, and zinc miners, where it's not getting easier to do these things. That's why I think you have two buckets that you look at in silver in terms of how this plays out. A, if you have a bigger spark in the monetary demand, that could be an issue for the supply. Or even without that, on the current trajectory, just the fundamental supply and demand picture is pretty imbalanced. And I know you have a bunch of silver miners on your show as well that talk about if we want to have more silver right now at the current price, it's not encouraging people to go out, risk their capital to start new projects. So I think there's two ways, and possibly both of them, that are going to drive that silver price higher at some point.